Good afternoon, everyone. Thank you so much for joining us for today's Lunch and Learn. We have a great 30 minutes lined up for you. Before we get started, I do want to remind everyone that this session is being recorded and it will be made available on community.franchise.org later this afternoon. As well, if you have any questions for our speakers today, please put that in the chat box and they will address it at the end. So today's topic is strategies for business growth, and it is brought to us by Key for Women. And I'm going to kick it over to one of our speakers today to get us into everything, Rachel Sampson, who is Senior Vice President and Director for Key for Women program, which is a program by KeyBank, who she's going to describe to us a little bit more. So Rachel, I'll kick it over to you.
Perfect. Thanks so much, Caitlin. At KeyBank, our mission is to help our clients and communities thrive. And I just want to take a couple of minutes to share with you about what our Key for Women program does. In 2005, KeyBank launched Key for Women, a program focused on advocating, connecting, and empowering entrepreneurs and leaders. And today, I'm proud to share that we have over 7,000 Key for Women members and an army of Key for Women certified advisors, just like me, ready to support women on their journey to financial confidence. Some of the things that Key for Women does, we really focus on ways to advocate for each other's success, to understand the challenges and provide opportunities to connect and network in our communities. We're here to empower you on the financial confidence to dream big and make those dreams a reality. Our Key for Women program is open to women, both prospects and clients, and our male allies as well. So if you haven't already registered, I encourage you to do so. You'll get access to the latest insights and advice to support both your personal and business success. We promise that we won't spam you, but we will guarantee to send you monthly emails filled with timely information for you to leverage in making financial and business decisions. It's also the way that we can guarantee yourself an invite to upcoming speakers like our November 17th Women in Negotiation webinar, How to Say Less and Get More. And the first 50 registrants will receive a signed copy of our speaker's book, How to Say Less and Get More, Unconventional Ways to Get More in Business. And other programs similar to that and all around financial and business acumen to connect you with other women business owners and leaders in the community and industry. To join, visit key.com/join K for W. Again, that's key.com/join K, the number 4W. And don't forget to follow us on social media. Key for Women is on LinkedIn, Facebook, and Twitter. So with that, I'm pleased to introduce today our two speakers. We have with us from KeyBank today, Carrie Calloway Carty. She is a Vice President and Senior SBA Relationship Manager and Specialist, as well as Jennifer Riggenbaugh, Vice President and Senior SBA Specialist Relationship Manager. So I'm going to go ahead and really turn it over to Jennifer and Carrie, as they've got so much experience and knowledge working with franchise and other business owners to really find creative ways to help you grow in your business and find success. So with that, Jennifer and Carrie, go ahead and take it away.
Thanks so much, Rachel. Good morning, everybody. So today's discussion overview, you got the bullet points in your email, I'm sure, but just quickly here. We're going to talk about the importance of a trusted advisor network, preparation for business growth, transition strategies, and utilizing bank financing. And last, we'll provide you with some resources that you can take away today to utilize the information that we're providing. So Trusted Advisor Network, many of you already own franchises, or you may be considering expanding your franchise. You may also be vendors or suppliers who support the franchise community. As we all know, advisors are a key part in helping us to be successful because we all have our specialties, and what we don't know can in fact be more detrimental to us in business than the things that we know in our specialty. So a couple of things that we want to highlight as we think about the advisors, the big three we typically focus on or people typically think of are accountant, attorney, and your banker. Now, in addition to that, depending on your stage of business, there may be other advisors that you're going to need. For example, if you're looking to sell your business, a business broker or a franchise business broker may be the right advisor for you as you look to move your business to market. The other thing to keep in mind as we think about advisors, these big advisors, is they may have different agendas or different focuses to help you be successful. So for example, your accountant's job, and we all love it, right, is to pay less in taxes. Their main goal is to find all of the wonderful legal ways for you to pay less money out of your pocket to the tax man and to put more of it in your bank account for your business. Now, on the flip side, if you're talking to Jennifer and I about wanting to finance a project, expand your business, buy more equipment or whatnot, we're the opposite end of that. We want to see at the end of the day that net profit, that profitability for your business is what helps to support a loan or line product that you may need. And so while we may be both advisors, our goals, our aims, and how we focus on getting you to your goal are quite different. That's why it's important to talk to not only your accountant about what your number should be, but also your banker if you're looking for financing, and your attorney as well. In addition to this advisor group, it's also essentially important to have your personal board of directors. So this may be, your best friend who tells you you're stretching yourself too thin and you need to take a break, right? It may be your a CEO of another company that you have a relationship with who can give you some strategic guidance. It may just be a group of 5 or 6 employees who can give you feedback about your team, about your competitors. It can't be highlighted enough how important a trusted advisor network is, and that will look different for each of your businesses and also each of the different stages you are in your business as well. Okay, Jennifer, I'm going to pass it to you for this next section.
Thanks, Carrie. So good morning or afternoon from wherever you will be. So I just want to first say that I'm so happy to be here today. I know this is going to sound corny, but I'm always impressed and a little bit in awe of people like you yourselves who are willing to strike out on their own. And you're not only taking on the responsibilities of being self-employed, but also becoming an employer for others. I'm always telling my children, be bold and be brave. And you guys are certainly bold and brave to make the sacrifices and take the risks necessary to do this. So I just want to applaud you for that. So I love it when I can help by playing a small role in helping you to do what you're trying to do. So it kind of leads me on to the discussion about preparing for business growth. And, we tried to keep this a little bit to reduce it due to the time frame and to make sure we left plenty of opportunity for questions. So we're highlighting 3 areas today. All of them are probably seem like no-brainers to you, but I just want to talk a little bit about each of them and see them from sort of the bank perspective. I know whenever I have an existing business owner come to me and tell me they're ready to expand, my very first question is, okay, who is going to take care of your existing operations while you focus your energies on this expansion? Do you have someone capable and whom you trust to do so? It seems like a basic idea, but you have to put yourself in a position that will allow you to focus on this new location. And if you've been the primary manager of your location to date, do you actually have an assistant manager or somebody who's going to be prepared to step into your shoes, at least temporarily, to take on the responsibility? They're going to need to be someone that's willing and able to handle the immediate day-to-day decisions. Otherwise, you're going to be pulling yourself in 2 or 3 different directions at the same time. So really setting yourself up to be able to focus on where you're going to expand is critical to everything. So that goes into your business plan as well. And how are you going to operate multiple locations? Are they close in distance? Are they farther apart? Are you going to be able to travel between? Or are you in a good position to do this? I know I have a client right now who has a franchise, and actually he has 4 locations currently, expanding to another 4, and he has a district manager. I believe he'll have a new district manager for the new 4, and then he's actually already adding a regional manager to kind of oversee those 2 district managers who then oversee the 8 stores altogether. So just, and that's why we kind of, as a lender, I know that I get a little concerned if there's too much growth too quickly, because are you prepared to do that? So just, you know what you're ready for and what you're not ready for, but just kind of thinking about who you've got who can really step in and make some of those decisions for you, so they're not calling you from the store with every last question or anything. So just kind of setting yourself up for that. So that's kind of the infrastructure portion of it. The financial statements is my favorite. That's my favorite thing to talk about, as you can imagine, being in banking. But quality financial statements is so critical. And I know that Carrie already talked about how important having like an accountant is as one of your trusted advisors, and certainly that's true. But I will also say that it is so important and critical for you to invest in a quality financial reporting system. For so many different reasons, you need to be able to pull reports and view things at the drop of a hat. I mean, if your banker is asking you for updated financials, you need to be able to pull those. I've had so many situations where some of the business owners were so reliant upon their bookkeepers or accountants that they may have to wait weeks before that person has the opportunity to update and prepare current financial statements for you. And that's, that makes it difficult for you to make decisions quickly and effectively and provide the bank what they need so they can help you move forward as well. So I would just say make sure you have a financial reporting system that can provide you balance sheets, profit and loss statements, accounts receivables and payable agings. It could even help you in some of them kind of project out how the rest of the year will end. And it also should be able to provide you the ability to prepare cash financials or accrual financials. So all of those things are just really critical for you to be able to provide. And I know numbers aren't really why you got into the business. It's more the running and the day-to-day and the operations like everyone likes, but the numbers are just so critical as you do look to expand, especially when you're going to grow your company even further. So just understanding where you are at any moment with your figures, your revenues, your expenses, it's so critically important. We also, I know Carrie will say, we also run into situations where we get financial statements that are difficult to rely upon. Maybe the balance sheet doesn't balance, or the profit and loss has some strange miscellaneous incomes and expenses that aren't really explained. So being able to understand where your numbers are in answering questions for us are just going to help you get that much further as well. Same with projections. It's definitely something that you might want to look to your bookkeeper and accountant to help you as you prepare projections for your growth. But it's also something that you need to understand because you're the ones that are going to be there really operating and running that business. So again, I know these things sound basic, but they're just so critical that we wanted to focus a little bit on these. I know I had a client a long time ago who was opening a sports bar, and the projections provided had nothing in there for cable, which seemed like a pretty critical component to a sports bar to be able to bring in all the games and everything else they wanted to play. So just being able to really look at those projections and not just say, oh, my accountant prepared those, just ask them the questions. Probably not what we want to hear either, and not the best scenario. So definitely they can provide advice, and I would recommend highly that you use your bookkeeper and accountant's knowledge to help you prepare these things, but just invest in some ability to do it yourself. So that is the financial statements. And then distributions. So one of my favorite all-time stories is a client who took out money from the business, and this is your business. These are your earnings and your funds, and everybody understands that for sure. But also keeping your business in a position where it can show a positive net worth not only makes the bank happy, but more importantly, gives your business kind of that sound equity to fall back on in situations like what we've experienced over the last couple of years. And the more you can build that net worth of the company, the better it is. But I have had some people take out distributions, and a lot of it thinking it's their money and it belongs to them. And I agree, it is your money. But if you're going to do that, I would say a couple things. One, don't distribute more than the profit your business shows. That way you're not showing negative net worth. The more you reduce your net worth, the less financing opportunities you're going to have, because I know on a conventional basis, we have definite debt to net worth ratio requirements. So every time you distribute money, it reduces your net worth and then changes that ratio to something a little less favorable. And then secondly, if you do want to distribute the money and bring it out of the company and put it into your own personal side, I would recommend talking again to your accountant and your advisors about where best to put that money. But I know from my perspective, if I see a lot of distributions, I immediately go and look at your personal financial statement and see, is that money going somewhere where I can't see? Is it being spent, or is it going to increase your savings? Is it going to increase your retirement? Is it going into real estate? Somewhere that we can show that those distributions are not recurring expenses, and so would be available for the cash flow you might need to expand your business. So, but you know, again, I had someone take out distributions from their company and buy themselves a plane, which was awesome. But at the same time, they then came back looking for more funds, and now they didn't have the cash available to help their growth, and their net worth didn't look as strong. So our options for lending to them were a little bit limited. So I would say definitely be talking to your bankers, your accountants, and really discussing those decisions as you distribute and as you distribute those funds to you. So those are kind of 3 key factors that we want to focus on as you prepare for your growth. And Carrie, if you have something else to add in that area, go for it. Otherwise, we can.
No, I don't think I have anything else to add. Thank you.
Okay.
We're going really well.
Okay.
The next slide, these really kind of tie into the first 2 things that Jennifer and I have been talking about. And really it talks about what is your growth strategy. I mean, that's what we're talking about today is growth strategy. And whether that is you're going to purchase an additional franchise, you want to sell your existing franchise, or you want to start up something new. I mean, you may be a member and not have a franchise yet or a business yet and looking to start up. And really, as we think about how bank financing can play a role in these different types of strategies, a lot of what Jennifer just talked about helps us to get there, right? So one thing I will comment on as we talk about startups or second location projections as it ties to franchise specifically, when we look at projections, you know, to Jennifer's point, you want to make sure that you can show us that you're the one who understands the numbers, that you're the one who is running this business. But also what we see a lot, especially on startups with franchise, is people will take the projection numbers directly out of the franchise disclosure and send me that without any adjustments for what's going on in their local marketplace, their local costs, or being able to explain it. You'll often hear bankers and financial advisors talk about assumptions, the assumption behind it. And that's true whether you're looking to purchase an additional, if you're looking to sell, everything else. It's about the assumptions that go along with the numbers if you're projecting it all, especially on those startups and expansion projects. One of the things I would also like to highlight is as you're thinking about selling your existing franchise, I mentioned previously how valuable Business Burgers can be in that process. The other thing to think about as you think about selling your franchise is, are you selling 1 location out of 5? Are you selling just a single location? And as Jennifer mentioned, the quality of your financials are going to be super important with that. So for example, to utilize bank financing to sell 1 location out of 5, we have to have a CPA side by side split out each location, and it all has to match to the tax returns for the last 5 years, excuse me, for the last 3 years. Are you ready to do that? And the answer is not yet. That's okay, right? That's part of why we talk about these things in seminars like this. If you haven't figured out a way to split your financials up so you understand how each of your locations is operating, not only does it help you plan for growth, adding a location, maybe 1 location is not as profitable, but it also will help us as we look at financing, whether you're selling a location or adding the 6th, 7th, or 8th location, it helps us to understand exactly what's going on. Jennifer, would you like to add anything on this one?
No, it was just something, I'm glad you addressed that, because I had meant to mention about the store by store. So again, being able to provide that or have that financing or the reporting system that allows you to track each store individually, even if they end up reporting up to the same tax return, just being able to look at each store and see how they're performing individually, so you can make adjustments to them now or in the future, is critical as well, as Carrie mentioned. So
Rachel, I see that we have some questions. Did you want to go ahead and take some questions now, and then maybe we can touch backwards on items, or how would you like to do that? You're on mute.
My apologies there, got the mute. Actually, we don't have any questions yet. That was Caitlin
Okay.
and me just saying to our audience that feel free to enter any if you have any questions. But I do have a question or a point that I was thinking about when we talked about the distributions. Can you talk about the challenge, which hopefully this never happens again, Can you talk about the challenge with the distributions and the PPP loans that we saw? In the distributions and just how that created kind of a problem in addition to the other things that Jennifer mentioned?
Yeah, so as you may not be aware of, PPP funds, which were very helpful to a lot of businesses, were shown on the profit and loss for a lot of businesses as well as a revenue line item. As we look to finance, we can't add that in as revenue, right? We take that out as a one-time expense. And what we did see is that on the back end, we did see some distributions come out of companies as a reflection of that additional cash capital. Oftentimes that was owners who had put in extra cash during when times started to get hard right at the beginning of the pandemic, and we're pulling that back out. But on paper, as you're looking to grow, being able to explain any large distributions you made as a result of this kind of unique time period is going to be important. Doesn't mean there's anything wrong with how it's handled or how we set it up. It's just as we look to talk about what we rebound, right? As we talk about growth, hey, I want to open another location. 2020 did not look great. 2021 looks good. 2019 was fine. How do we tell the story in the middle? That's part of that story in the middle, is being able to explain, did we utilize programs? Did we take distributions? Did those go into other locations or other issues we had? Those types of things. Absolutely.
Awesome. Great, thank you. And as we think about that from a franchise perspective, or even general business owners, would love to get both of your perspectives. You know, what is that cautionary tale of that business owner? I know we mentioned before about, you know, the cable and not putting that into projections, but what are some of those other things that you think about that often go unnoticed or unaddressed that you really think our business owners need to be cognizant of?
Well, I would say one of the things that we address that's not often in there because it's a capital expense are just that improvements capital, you know, especially as a franchise. I know you have to upgrade here and there and have to do some things to keep with the franchise requirements. So just making sure that you're accounting for those one-time expenses and maybe saving some money. I know on a personal level, there's always here's my monthly expenses, and then there's my annual HOA, you know, dues or something else. It's kind of the same thing. You're making sure that you're preparing yourself for not only just the everyday operations, but the things that are going to come up, you know, every few months, every year, that type of a thing. That's one of the things that I do. And some people tend to forget the insurance costs and really plugging those into that and understanding the payroll wages, the payroll taxes. And back to what Carrie said, just making sure your assumptions, and as you start to write down those assumptions, which are just, you know, what you were thinking about the revenues, like how many people per day or payroll, how many people are working per day. I think it's going to bring up even more ideas of other things you have to remember. But there's, you know, some of those are some of the things that I've seen. Carrie, do you have any others?
Yeah, you know, just to kind of piggyback on that, you know, the one thing I would say, and we didn't cover a lot here, is the concept of fallback capital, right? As we talk about growth, as we talk about that next location or the startup, the bank is going to want to see that you have fallback capital. But that's also true even if you're not looking to finance something. So to Jennifer's point, one of the tools that I've done when I've done mentorship is we've looked back a year and done a cash flow worksheet of the previous year together and said, how much should we start with in the bank? How much should we end at the bank? And it's less about what does the profit and loss say? What about the bank statement? Where does the money really going? What's the top and bottom line look? And one of the resources or the organizations that we work with is SCORE, and there'll be some resource links for you later. They have a great tool for cash flow analysis, and they have free mentors as well, which is a great opportunity there. But to Jennifer's point, that's really where we see people run into trouble. They grow quickly and they aren't aware of those one-time expenses, or they don't have enough fallback capital. And that's where, even if you don't do financing, that's where it's great to have a chat with a banker, have a chat with your accountant, really talk about how much do I need to save? How much should I have available as fallback capital in case things happen, which, as we all know, the last 18 months have been a lot of things happening, unfortunately.
Yes, exactly. Well, thank you so much for that insight. And I know you mentioned we have a number of resources that we'd like to share.
Yeah, so I can talk briefly about SCORE. So I volunteer for SCORE and teach a class once a month on business planning with SCORE. SCORE is a nonprofit organization sponsored by the SBA and various organizations, including ours. And they have all volunteer mentors and teachers as well. And they're all people involved in the business industry, and it's free. It's a free resource. And so if you haven't had an opportunity, whether you're starting a new business, whether you're growing your business, whether you just need some great information about a specific topic, they do live classes and have online video and webinars and all kinds of stuff as well. And then SBA, which obviously Jennifer and I are both very involved in, given what we do. The small business also has small business development centers. And Rachel, we need to update that link on there. The Small Business Development Center has a separate link we can provide. Those are for more established businesses rather than startup businesses, and provide one-on-one counseling and resources as well for business owners, and is also free of charge.
Great, thank you. And then of course we have Key for Women. Of course, we have, as I mentioned, over 3,000 certified advisors across Key's network that have been specifically trained in what are really the challenges that women continue to face, and how do we overcome those? And do you have a banker that's in your corner, whether male or female? We absolutely love our male allies, as I mentioned, that really help you to sit down and figure out where you are on your journey, because that can be anywhere. We want to make sure that we meet you where you are and that you set up and have an appointment and continue the conversation. To do that, please visit us at keyforwomen@keybank.com, and we'll make sure that we connect you with a local banker for you to connect with. And as I mentioned, visiting key.com/join K4W in order to join our member network to get access to our tools, resources, and insights. And of course, you can always visit key.com/women to connect, and you'll see that we partner with many organizations like SCORE. As Carrie mentioned, we just finalized our pitch contest in Cleveland, where we partnered with SCORE to get to 2 critical supports that women often have an issue with asking for or finding, and that's mentorship and capital. So we're pleased to do that and partner with such a fantastic organization. We have a number of other critical partners as well. Also insights, whether it's personal, professional development, and business and financial acumen. So with that, I will say thank you so much for your time. Thank you, Carrie. Thank you, Jennifer, for lending your time and your expertise. You all are fabulous. And with that, I'll go ahead and turn it over to Caitlin.
Awesome. Thank you all so much, Carrie, Jennifer, Rachel, and Key for Women. This was great information, and you guys are doing great things. So thank you so much. Everyone who attended, thank you for taking your time this afternoon and investing in your own education and your own business's future here with IFA. Everybody have a great rest of your afternoon. Stay safe, stay healthy. Thank you all so much.